While the Western world was paralyzed by the trading halts and the margin hikes we discussed yesterday, something far more sinister was unfolding where almost nobody looks deep in the arteries of the global logistics system. Keep your eye on this because the noise of the trading floor has a way of hypnotizing you while the truth is happening on the loading dock. While you were staring at a frozen screen with a buy button that didn't work, the physical metal was leaving the building. Not moving around. Leaving. We have received corroborated reports corroborated from port authorities and logistics insiders in both New York and London that the volume of precious metals moved in the last 48 hours exceeds anything seen since World War II. This wasn't a trickle, it was a flood, and floods don't happen by accident. Here's the connection you're supposed to miss. The paper. Market can freeze in a second, but forklifts don't freeze. Trucks don't freeze. Aircraft pallets don't freeze. Crates don't freeze. The physical chain kept moving while the digital chain locked up. Keep your eye on this. The bullion banks, realizing they could no longer suppress the paper price without bankrupting themselves, made a choice. A cold, surgical choice. They decided to liquidate the physical assets to the highest bidder before the official default, and that bidder was not American. So this morning, the vaults in JFK and Heathrow are echoing with emptiness. Let that sink in, echoing, empty. The metal didn't evaporate, it immigrated. Now, why would the physical move like that with that kind of speed, with that kind of scale? Keep your eye on the arbitrage gap because that's the gravity well. For the last 3 days, silver on the Shanghai Gold Exchange SGE has been trading at a premium of nearly 18% over the COMEX spot price. 18%. In the world of high-frequency finance, an 18% risk-free profit is infinite money. It doesn't just attract capital, it acts like a gravitational black hole that bends the entire flow of global supply toward it. Ask yourself, why would a refinery in Switzerland sell a bar of silver to a bank in New York for $67 when they can sell the exact same bar to a buyer in Shanghai for $80? They wouldn't, and they didn't. The laws of economics dictate that capital flows to where it is treated best. China created a price vacuum, and that vacuum sucked the entire floating supply of silver out of the Western financial system in less than a week. The West tried to manipulate the price down. China used that low price to drain the inventory. It was geopolitical judo. You push down, they pull it out. Keep your eye on that move because it's the entire story in one sentence. And now the official data is beginning to leak out, and it confirms the worst fears. The COMEX inventory is divided into eligible silver sitting in the vault, but privately owned and registered the silver available for delivery to satisfy contracts. Keep your eye on that distinction because it's the difference between it exists somewhere and you can actually get it. As of the latest update, the registered category has collapsed to a terrifying 0-point level. There are now over 600 paper claims for every single physical ounce of silver remaining in the registered category. Read that again. 600 claims for 1 ounce. This is not a market, it is a crime scene. The fractional reserve banking system applied to precious metals has mathematically failed. So, what happens if even a fraction of the contract holders stand for delivery today? Keep your eye on that question because it's the trigger. The exchange will be forced to declare a default. The cupboard is bare, the emperor has no silver. Now comes the part most people wave away as too dramatic, right up until it isn't. Why is China doing this? And why now? This is not a trade for them. It is a strategic maneuver for survival. The Chinese Communist Party knows that a conflict over Taiwan or the South China Sea is becoming inevitable. Modern warfare is resource intensive. You cannot build a hypersonic missile, a guidance chip, a fighter jet, or a drone swarm without massive amounts of silver. It is the most conductive metal on Earth. So by cornering the global supply, China is not just protecting its wealth, it is choking the US military-industrial complex. It is ensuring that when the conflict starts, the West will face a critical shortage of raw materials needed to build weapons. This is economic warfare disguised as commodity trading. Keep your eye on the disguise. But the military angle is only half the chokehold. Beyond that, China's industrial hunger is voracious. The Belt and Road Initiative is the largest infrastructure project in human history, and it is powered by green energy. Solar panels, 5G towers, and electric vehicles all require silver. China already controls refining capacity for rare earth metals. Now they have seized the silver. They looked at the geological data. They saw that global mining production is falling while demand is exploding. They realized that he who holds the physical metal controls the 21st century. And keep your eye on this, because it's the most misunderstood piece. They aren't buying silver to sell it back to us later at a profit. They are buying it to consume it. Once this silver enters the Chinese mainland, it disappears from the global market forever. Now, rewind. Because this heist didn't start at the dock, it started in the accounting. For years, analysts have suspected that the London Bullion Market Association (LBMA) has been lying about its stockpiles. They use a system of unallocated accounts which allows them to lease the same bar of silver to 10 different clients. It is a Ponzi scheme. Keep your eye on unallocated because that word is where reality goes to die. The Chinese buyers, however, do not buy unallocated. They demand allocated, segregated, and delivered. They want a specific bar with a specific identity, sitting in a specific place under a specific claim, no paper fog, no trust us, no IOU. So when China showed up with billions of dollars in cash and demanded immediate physical delivery, the LBMA's accounting tricks fell apart. We are hearing rumours of a soft default in London where major institutional clients are being offered cash premiums to not take delivery. Think about that. Here's extra money, just don't ask for the metal. But China refused the cash. They took the metal. And in doing so, they exposed the fraud of the Western banking system. Keep your eye on refusals. The people who refuse cash are telling you what cash is. And this is where the silver story becomes a symptom of the larger disease, the death of the US dollar as the world reserve currency. For 50 years, the world held dollars to buy oil. But now Saudi Arabia is selling oil for yuan. The BRICS nations are building a new currency backed by gold and commodities. China is dumping its US Treasury bonds, which are losing value due to inflation, and using that dying paper currency to buy hard assets. They are trading our debt for our wealth. They are exiting the dollar system before it collapses, and they are taking the tangible assets with them. Keep your eye on what leaves first, the things you can't print. When the dust settles, the West will have piles of printed paper, and the East will have the resources that run the modern world. And don't think this is some abstract chess match that never touches your kitchen table. The impact of this drain will be felt in your daily life very soon. The global solar industry relies on cheap, abundant silver. The Green New Deal and the net zero targets of Western governments are mathematically impossible without silver. With China now hoarding the supply, Western solar manufacturers are facing an existential crisis. Factories in Germany and the US will likely face shutdowns due to raw material shortages. The price of solar panels will skyrocket, making green energy unaffordable. We have legislated a transition to a technology that we no longer have the ingredients to build. We have handed the keys to our energy future to our primary geopolitical rival. Keep your eye on that irony because it's not accidental, it's structural. The shortage is already trickling down to the retail level with frightening speed. The US Mint has been cancelling allocations to dealers. The Royal Canadian Mint is on backorder. Private refiners are reporting delays of weeks or months. This is not a bottleneck, it is a depletion. The premiums on physical coins have decoupled from the spot price. You might see silver at 70 feet on the screen, but try to buy an American Eagle for less than $100. You can't. The real price is being discovered in the streets, not on the screens. The physical market is screaming that the paper price is a lie. Keep your eye on the spread between what you see and what you can actually buy, because that spread is the confession. And China is the biggest whale, but it is not the only one. Russia, cut off from the Western financial system by sanctions, has been quietly accumulating precious metals to sanction-proof its economy. India, the world's largest cultural consumer of silver, has seen imports explode in 2024 and 2025. The Indian population treats silver as a savings account. As the rupee weakens and inflation bites, hundreds of millions of Indians are converting their savings into silver anklets and bars. This grassroots demand, combined with China's state demand, has overwhelmed the West's paper supply. The East understands the value of real money. The West has forgotten it. Keep your eye on who remembers what money is, because memory is destiny. So we have to ask the hard question. How did our leaders let this happen? How did the regulators allow the strategic silver stockpile of the United States to be sold off to China? The answer is incompetence and greed. The bullion banks were allowed to suppress the price for decades to mask inflation. They kept silver cheap to make the dollar look strong. But cheap silver meant foreigners could buy it for pennies on the dollar. Our leaders sacrificed our strategic reserves to maintain the illusion of a strong currency. They sold the family silver to pay the credit card bill. And now the bill is due and the silver is gone. Given the state of the vaults, a declaration of force majeure by the COMEX is now a question of when, not if. Keep your eye on that legal language because it's how institutions confess without admitting guilt. Force majeure is a clause that frees parties from liability when an unforeseeable event prevents them from fulfilling a contract. They will claim the silver shortage is an act of God or a supply chain disruption. They will settle your contract in cash at a rigged price. This will be the moment the paper market officially dies. because when they refuse to deliver metal, the price of the contract goes to zero and the price of the physical metal goes to infinity. We are days away from this bifurcation. Keep your eye on the split paper versus physical screen versus street claim versus possession. And for the banks holding the bag, the nightmare has just begun. JP Morgan and the swap dealers are short billions of ounces. Now that the physical metal is in China, they cannot buy it back to cover their positions. They are naked short in a market with no liquidity. This is a recipe for infinite losses. The Federal Reserve will likely have to step in and bail out the bullion banks to prevent a systemic collapse. And that bailout will involve printing trillions of new dollars, which will only drive the price of hard assets even higher. They are trapped in a doom loop of their own creation. Keep your eye on the loop print to save the system. Printing destroys the system. As news of the Chinese drain spreads, industrial panic buying will begin. Companies like Apple, Samsung, and Tesla employ smart people. They see the data. They know the supply chain is breaking. They will stop buying just in time and start buying just in case. They will attempt to stockpile years' worth of silver to keep their factories running. And when multi-billion-dollar tech companies start panic buying a scarce resource, the price chart goes vertical. We will see moves of $10 or $20 in a single day. Industrial users will bid the price up to whatever level is necessary to survive. Keep your eye on procurement departments, because when they panic, the public learns last. For 5 years, this channel has warned you to get your silver out of the banking system. We told you that if you don't hold it, you don't own it. Today, that warning is no longer a prediction. It is a reality. If you have unallocated silver in a bank account, it is gone. It was likely leased to a bank that sold it to China. You own a claim on a bankrupt entity. The window to convert digital currency into physical wealth has effectively slammed shut. The inventory is gone. The ships have sailed. Keep your eye on the verbs gone, sailed, shut. Those are not market conditions. Those are finalities. We are witnessing the birth of a new monetary standard. The period of fiat currency 1971 to 25 is ending. The period of resource-backed currency is beginning. In this new world, nations will be ranked not by how much debt they can issue, but by how much gold, silver, oil, and land they control. China understands this. That is why they drain the vaults. They are positioning themselves to write the rules of the next global financial system. The West, holding nothing but debt and paper derivatives, will be forced to accept the terms dictated by the holders of the metal. And when the general public realizes that their money is losing value and the banks are empty, social unrest is inevitable. We saw the trading halts yesterday. Next we will see withdrawal limits, then capital controls. The government will try to lock you into the dying system. Keep your eye on the sequence halt limit control. The silver market is just the canary in the coal mine. The loss of the silver is a signal that the entire financial structure is hollow. The panic that started in the commodities pits will spill over into the streets. This event marks the final transfer of wealth. It is moving from the impatient to the patient, from the paper believers to the metal holders, from the West to the East. Those who hold physical silver today are the new nobility. They hold the only asset that has no counterparty risk and is essential for the future of technology. The banks tried to steal your wealth by suppressing the price, but in doing so, they handed the greatest investment opportunity in history to those who are paying attention. Keep your eye on the paradox. Suppression created opportunity right up until it created scarcity. We are entering the phase of unobtainium. You'll see a price on the screen, maybe $80, maybe $100, but you won't be able to buy at that price. The dealers will be sold out. The mints will be closed. The peer-to-peer market will be the only market. You will have to find someone willing to part with their metal, and they will demand a king's ransom. This is what hyperinflation looks like. It isn't just high prices, it is empty shelves. The silver is not expensive. The dollar is worthless. The vaults are drained. The ships are crossing the Pacific. The game of musical chairs is over, and the West has lost its seat. China has executed the perfect economic checkmate without firing a single shot. They took the silver, and they left us with the debt. The great silver exit is complete. If you are holding physical metal, hold it tight. It is your shield. If you're not, pray that the system holds together a little longer.